Hello traders, how are you? Vladimir here from Traders Academy Club. This video is a weekly Forex forecast and the market analysis for the week of 19 to 24 July 2020. I hope you are well and safe out there and you take all the precautious actions you need in this situation. This week is very interesting and have some interesting opportunities. Actually, not just the week but the period. We have several things building up here for some good swing moves. It is important to remind also this is now a summertime, so during the week many instruments you might feel that the moves it takes time until the moves develop, and as traders not always we have these patience, so it's important to remember then when there are swing moves building up, especially levels of weekly and daily time frames are reaching out, it takes time. So before I dig deeper, if you are watching our channel for the first time, I would like to first of all welcome you to the community. Also, I would like to invite you to subscribe to the channel. Just follow the subscribe button below this video, and please remember to enable the notification. And also I would like to invite you to join our trading club, the Traders Academy Club, and you can also join our free Telegram channel where we share posts and analysis on daily basis. So what do we have? On Monday I publish, as always, a text version for my forecast. So you can come to the blog vladimirrybakov.com and you will find it ready for you there, or just come back to this video and you would see that waiting for you there on Monday. So let's go over the previous week analysis and see the opportunities that we had, how the market moved, what is working good for us, what has to be updated, and what failed and has to be removed. So the first one was the euro dollar, where we expected to see one more push to the upside until the euro completes a bearish divergence on a daily time frame. So let's see where do we stand with the euro dollar. The push up is happening, and right now we are approaching to the critical zone, which is around the 115, 116, where I expect the buyers to start and to lose control. So coming inside this box, of course, if you are involved in buys, this is a good place from my point of view to consider management, and I would expect to see a good reaction from there on the next several coming weeks. Again, take very important note here, these are weekly and daily levels. It takes time until it develops, so it might be several days, it might be several weeks. There is no way to predict how exactly and when exactly move will begin, if at all. The zone I see is surrounding the 115, 116, and that's where I expect to see this divergence creating, completing, and corrections begin. Let me know, what do you think about the euro dollar? Are you bullish? Up to where? Where do you expect it to go? And if you are bearish, then what's your reasons? Please share in the comment section below this video and let the other people that watch the video enjoy your view. The next one on the list was the Aussie Cad, which also approaches to a critical zone, massive resistance. So exactly like with the euro dollar, we expect to enter this area, and from there likely to assume we will face reversal signs. So Aussie Cad, let's see where do we stand with that. Not much happened during the week. As we can see, if we move it a bit, the zone is still there for us. Very, very strong area surrounding the 095, 096. We already have the divergence here building in, and what is required here with this pair, the reversal sign. So on the lower time frame, what we will want to see basically would be false breakouts, fake attempt to create new highs, and mainly creation of the lower lows, to make sure we start to build lower highs, lower lows. Why it is important to be seen on the lower time frame? Because lower highs, lower lows is a sign of a bearish momentum, and if we expect it to start and create a correction to the downside, we need to see the lower highs, lower lows forming, and for that we need to make sure it's building up, and it could be on 4 hour false breaks and lower lows, or the 1 hour. We need to see false breakouts, and we need to see lower highs, lower lows building in, and then we can assume that we start the correction. Once again, very important to say, this is the zone, or that's the levels we have from weekly and daily time frames combinations. It takes time until things develop, and as you can see on the last several weeks, the price tends to dance around the zones. So not always the moves happen in a pace like this or like this as we would prefer, and it is very important to remember that, because as traders we always tend to be lack of patience and to rush into decisions and to get frustrated when things don't develop as fast as we would want, and to prevent that and to avoid these emotions, it is important initially to understand what time scale we are dealing with here and how long can that take. Okay, remember, if the move up takes for like 3 months or 4 months, that's long period. The correction could take some time. Okay, this is very important for understanding when you deal with the longer time frames. Now, as presented on the previous week on the crystal, we have several very important levels coming in here, as you can see. Dates, sorry, not levels. Okay, all this second part of the month basically is critical, and we enter this period right now. 19, 21, 23, 26, all that puts a serious statistical pressure on the bearish direction. So pay attention to that. The pair is entering the zones where likely to assume the bulls will run out of control and the bears will enjoy it. So sugar we neutralized previous week, Bitcoin we neutralized previous week. The next one was the euro pound, where the idea was to look and sell the after retraces, and the invalidation plan would be for us if we go in straight move through the level of 61.8 Fibonacci of these wavings. And this is exactly what happened with the euro pound. After the move down, we had one, let me just mark it properly here, we had a straight move above 61.8 Fibonacci. Now this is the place where a red bulb is coming on, and this is the warning sign that the market gives us. That's where we need to have some patience, and this is where things become interesting again. I don't claim it necessarily will do that, but one of the options for the pair to follow from here is actually this: 3 waves to the downside, 2 waves correction. And now what we want to see is the price to go below this high, to make sure this was a fake attempt to create the highs, create here the lower lows basically, right? And on the lower time frame we would want to see that gain the momentum. How do we gain momentum to the downside? By making lower highs, lower lows. That's the definition of a possible bearish trend. So if the euro pound managed to do so, then I would expect the pair to start and to develop much deeper correction to the downside. If it doesn't go and complete the reversal and go below the levels I wanted to, as I show, then we are going to complete here a new high for the next divergence. But it will then take some time and basically will invalidate our view. So if this doesn't, if the price doesn't go below this area and does not make the lower lows, but alternatively create 3 higher highs, higher lows, that neutralize the bearish view, at least temporary. Now, what do you think about the euro pound? I know recently this is a pair that attracts a lot of traders and a lot of money. So let me know, what do you think about it? A lot of traders are trying to predict what is going to happen with all the Brexit related things. The impact is direct. So let me know, what do you think about the euro pound and what's your expectation, if it's to the downside or to the upside. Please drop your view in the comment section below. And I would like to take a moment and to ask your support back, your help to the channel and all the work we do for you. If you find such videos helpful, educational, interesting, please hit the like button below the video and share your feedback in the comment section. Your help is very much appreciated and very important to the channel to continue to grow and to continue and be able to present all this content for you. This video is completely free for the community, so please feel free to share it with anyone who you believe can have a benefit by watching it. EUROCAD, we neutralized the previous week, and the Kiwi Cad. Here is a very interesting one. Reached the critical zone. We wanted to see 3 lower highs created and then looking for the bearish continuation. On a crystal ball, also previous week we discussed and we got several very important zones there as per the date. Now let's see what this pair has for us. During the week, this is what we enjoyed from. We finally got the 3 lower highs, lower lows, and we got the pullback, and as planned, we got a beautiful move to the downside. The question is, what's next? And here is where the contradiction comes in a bit. From one side, we can claim, okay, now we have bigger waves to the downside. But on the other side, we have 3 higher highs, 3 higher lows, which contradict. This is a bullish direction, and the previous one is bearish direction. That's a full contradiction. Watching on a higher time frame, we are yet around the critical zone, so likely to assume that this cycle does not change. It only takes time until it will hit the next move. So the question is what to do in such case. Which of the highs and the lows will be defined? And here is the truth. It's impossible to predict. Are the buys going to push a new high, or the sellers will take the control once you have contradicting signs? There is one thing that is clear when you are facing contradicting signs, and that there is no clear money flow on this pair currently. Okay, of course things change, but as for now, if there is no clear control by the buyers or the sellers continuously making the lower highs, lower lows, and once it contradicts, the market is telling you that there is no serious and real money flow. As simple as that. So what I would want to see from this pair, basically it's very simple. Or we go below this low, and on the lower time frame we continue and we are back to the bearish direction by making the lower highs, lower lows. This should be a good bearish sign for continuation, or to complete another false breakout and the multi-time frame divergence, daily and 4 hour. And if we do have this new high, let's just assume we go here, then once the divergence completes, to start and look for the reversal signs again, lower highs, lower lows, or false breakouts and convergence. So that's basically what currently the market has for us. Does the daily cycle, does the daily analysis change? No. But the timing to be involved on the lower time frame does. And as traders, you always have two choices. Or fall in love with your analysis, with your trading and with your trade, and try to convince the market that you are right, or follow whatever the market gives you and make the right actions accordingly. And if you find contradicting signs, the best way is not to stay in and to pray for the market to still work as you would wish, but step back. Small profit or small loss or even break even are way better than a big loss. Think about it. So the next one on the list would be for us the commodities. But before commodities, I would want to go over the pounds. So to sum up, Kiwi Cad still around the critical zone, and I'm following for one of the scenarios I mentioned to enjoy the expected correction. Once again, I want to mention we are talking here about weekly and daily levels. These things take time. If any of you expect to enjoy from fast move, it might happen, but it might not, and you could get disappointed. So if you only after short-term quick opportunities, such opportunities coming from higher time frames might be not the right thing for you. That's another mistake traders tend to do, and that's try to work with wrong time frames. Scalpers or intraday traders should not work with weekly and daily levels because it all takes time to develop. Okay, very, 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 very important. So pounds, we were following the pound Aussie and the pound Kiwi. The idea, let's quickly have here, of the pound Aussie, we wanted to see the correction and the continuation with the daily bullish divergence. What happened with this pair though, that after the first push, we were facing a bearish hidden divergence, which later was confirmed on the 4-hour chart as divergence as well by itself. So with this pair, right now, by the way it develops, we got a correction. But the correction is pretty deep. And we did not yet restarted. We did not complete any reversal signs. So basically, there is no real bullish momentum coming as for now. There are contradicting signs. Because of that, for me, such view is neutral. And I want to see either we go to complete one more low and massive divergence, or is it going to hold the bottom? I don't know, and I don't have any way to predict it. But I do know that as long as the situation of the analysis is not clear, I don't want to be involved. And the pound Kiwi, same story. We have the divergence on the daily time frame. We expect to see correction building up on the 4-hour. And this one is currently offering us such a view. First move and a range. So the way we want to see the price behaving in order to return to bullish and to complete the corrective mode is to get above the range, hold it, retest it, and to continue. And the breakout should hint a bullish view. How? By making the higher highs, higher lows. It could be on the lower time frame, 1-hour chart, no problem. But we need to make sure the buys are back in the game. If that happens and this range is broken, then I assume we continue upside in the correction. If the range breaks to the downside, like with the pound Aussie, what did they do? Then like with the pound Aussie, we are probably going for one more low. Let me show you here, like this, to complete a massive divergence there. Which scenario will the market choose to follow? Again, we don't have a way to predict, and you don't need to predict. Just follow the fact. If it pushed out of the range with making higher highs, higher lows, this is a sign for a likely upside move. Of course, there will be no guarantee for that, but the chances would be better. If it doesn't follow that, then the market simply gives you the hint that there are no real buyers, and you should not stick to that. Pound franc, which also we wanted to see, like the euro pound, a mirror, also got contradicting signs. And personally, now with the zigzagging scenarios here, I see nothing interesting. That's too zigzagging and not clear trending structure nowhere. So my view currently is neutral. And before I dig to the commodities, I want to share another very interesting pair I find. This is the Kiwi Dollar, and I want to show you here something interesting. So we have a massive box coming in, and once again I want to explain that's a long-term box, okay? Weekly and daily levels. So do not rush before you see signs. But we have some massive areas here and very important zone right here, zone of consolidation, which could be a serious problem for the buyers. So I see this divergence coming in play. This is a massive movement. I expect this last leg to complete, and on the coming weeks, which we will follow up in the next analysis, I expect to see the pair topping and retracing. The way it looks and builds, New Zealand dollar should be a very, very interesting opportunity to follow. Now let's go to the commodities. We had the silver, which where is it? Here, which is also one of the instruments I follow up. Two massive levels here from the daily and the weekly time frame, and we are right there right now. The first area is here. Let me just mark the zone, and the second area is right here. So now we're follow up for reversal signs. We want the moving average divergence to complete. We already have one engulfing in play. We already have a false breakout on the 4-hour chart. So one of the scenarios could be it. We might go and retrace and break this low to start the correction, or we might go and complete the clearance of the weekly level 1963, 1965, complete this false breakout, complete the multi-time frame divergence, and start the movement to the downside. I personally think that, and again, it could take time, okay, but I personally think that this zone we are currently in, that's the place where slowing down and developing a correction, which after I expect the price to go and push much higher. But as for now, I do expect that the next several weeks we will be facing a fight between the buyers and the sellers. I might be totally wrong here, but this is my current read. The gold, pretty much the same with its divergences developing. We do not have ending signs yet. We need more evidences. So as long as we don't have the reversal, gold could continue and push. I don't think it's going to be massive. I think it's only a question of time until it will complete the turnaround, and we will see on the lower time frame reversal signs, lower highs, lower lows. So definitely interesting things developing, and I believe that we are heading into a series of weeks where the pressure would start to be built up as bearish. And one that I have very interesting on the list, that's Ripple, which have this structure on a daily, then two waves correction. We have the breakout, retest, hold over the supportive zone. The lower time frame also looks good by making here its own structure to the upside, corrections, and I would expect the Ripple to continue to the upside. So I think it's a very interesting opportunity. So that would be all for this week. As you can see, the market is in a phase where the next major swing moves are building up. It is important to remember that such things could take time. We are also during the summer. Do not be surprised if some pairs would be more in a slower mode. It's all part of normal price behavior and movement. So thank you very much for watching. I hope you find these ideas interesting and helpful. I would like to invite you to join our trading club, the Traders Academy Club, and to enjoy our live market analysis with all the opportunities we find on daily basis. Enjoy our live meetings and enjoy our trading reports that we send to our members on a daily basis. The link to join is right below this video in the description or on the comment section inside the pinned comment. So thank you very much once again for your time. I wish you a fantastic week ahead. Stay safe, be well, and I'll see you around.